Dan, Brad, what's going on today?
Howdy,
Brad,
howdy.
how
Hey,
are you,
Dan.
sir? Thank you for the introduction. Brad, it's been such a long time since you and I have kicked it.
Yeah, I
Uh,
don't know if I recall how to present. Good thing
I
it's
don't
under
either.
control today.
You got to get some of the boys in here. Mike,
Got to get my feet back under me.
Wally, it's good. We should have just had Waleed do all of this anyways.
I know Wally could.
Barry and Waleed, um, everybody else. Love you guys. This is all for our subscribers. We're so glad that everybody's joining us for the Q&A sessions. We do have a lot to cover today. So before we do, let's cover the basics, which are this. We are not a registered investment advisor. Our typical disclaimer, very standard stuff in this industry. We are a information and education technology provider, so please do not accidentally construe anything that we say here as literal investment advice. Right, Brad? Don't you do it.
Here, here.
Um, Brad, I gotta tell you, I feel like we can bust into the slides kind of later. I'm gonna minimize the presentation because, my goodness, we got a lot to talk to you guys about today. Let's sort of get down into it. And Brad, you sort of gave me some really good highlight points, and I want to also discuss something with people. I want to show people something that we usually don't show. You ready? Brad, you haven't seen this either.
All right, man. I'm sitting down. What do we have?
Boom.
We have our bot analysis here.
Yeah, well, not bot, just remember, guys, we started Trade Ideas in 2003, and since then it's been evolving, being developed and continuously improving, and there is no finish line for what we do. In fact, as we have said before, we still potentially, depending on how, we are treated by the one up high, go IPO in 2020. So why am I so, again, pumped about what we're doing is simply, let me show you. Since we launched the AI, we started tracking our executions. Here we are in, what is this, March of 2017, right?
Yeah, just a couple years back.
2 years. And here we are, 1,234 trades. And to be fair, it kind of started creeping. I mean, this was a nice jump, boom, kind of. And you can tell that the gray part or the light blue part is demo, the dark blue part is live trades. So you can kind of see what's been going on. And the reason we want to share this with you, because as our subscribers and the people that use our technology, we want you to know what we know. We want you to see what we see. And we want you to be aware of the trends that we see ourselves, because it's through these trends that we make decisions, okay? So here we are, and you can tell, look, as a business in general, in fact, Brad, we both know that the investment business is kind of a cyclical business. You've got the January excitement, everybody gets in, stuff starts happening, and there's like a little bit of always like the cyclical summer doldrums,
Sure.
and then it picks up again. And so here's your cycle. La 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 la. Look at the big jump from the peak of October 2017, 6,897, to the peak of 2018. Well, not the peak. Sorry, that's the first two. Just January of 2018. I dyslexiaed my 0 and 1 here. Nice work. And what's happening here is, guys, is kind of, if you remember what Brad and I keep on talking about, right, is this, that we're making it easier for you all to interact with our data and not just simply look at it and then start fumbling around, but actually act on it quickly. And here you can see how this is monthly, obviously. So there's January, so we come into December of 2017, and big jump for January. And things kind of.
December's notoriously a little slow in the market with all the holidays going on.
Totally. So here we go. But you can see from like the beginning of 2017, when we started to track this really, right? to 2018, you know, nice solid year of growth, right? But look at 2018 pickup and really head strongly into the end of the year. Okay, you guys with us? So this is what's been happening with our executions. And as we said here, we're working hard now on really getting the automation of Holly. And not only, and it's not just about that, because I'm going to be talking about how the pure automation of Holly is one component. I mean, that's the mechanics of the gear shift, where you don't have to press the clutch, let go of the gas, and use your hand to shift the gears. It's doing it for you. But look at the results. This is our first month, really, of this coming together. And you can see that we have beaten our previous records from 2018 in terms of live executions by, I mean, not twofold certainly, but by a fairly big amount. But what's even more encouraging, Brad, is look at the demos.
Yeah, which I really like to see. You know, I don't like to see anybody jumping in without really having a great idea of how to utilize the software.
So do you guys, and I want to make sure everyone, if you can give us some high levels, because again, you know, quite a few people here. Do you guys understand what you're seeing that we're showing you? We're giving you an inside look into, it's almost like taking a look at a company's financials to some extent. You know, and we tell you guys that, hey, you know, we believe we're successful, we believe we're a company that does well. But we are showing you literally, these are the tools that we ourselves use to track. And what's kind of cool here, remember, we said we're only going to keep 1,100 people, 1,000 people rather, at the $1,100 Holly rate. Look at the demos. Look at, this is what you want to see. Okay, look at the amount of people working through, practicing in a way now that they've never been able to practice before. You guys see what we're saying here? This is just so that you know that when we are communicating with you, well, obviously we're always going to be honest, because that's what we do, and there's no other way to run a good business. But we want you to be proud sort of too about what's happening, because this is all a reflection of all of our work. We don't just come up with this in, you know, some sort of focus group, or rather the focus group is the whole business. We're always getting real-time feedback from you guys, and we're working on that to give you the next level of technology, the next level of tools. Okay, so I'm going to close this window up. Any questions here?
Well, I think it's important to note too, it's not just time that has caused that increase, it's adding functionality to it. You know, you mentioned the automation of Holly, but there's some, you know, variety of things that we've added to Brokerage Plus along the way that really does allow it to excel like that.
No doubt whatsoever. So guys, I want to show you something. You know, number one, I want everyone to make sure that they themselves understand that we practice what we preach. Okay? Practice what we preach. What does that mean, right? Well, remember, how many times have I sat here and I said, well, first of all, we trade for real. We are taking the Holly AI trades ourselves. We are working with them. We are executing, because otherwise, how could we possibly give you guys a technology and a product if we ourselves did not believe in what we were doing? And there's only one way to believe, only one way, and that is to actually use it. So then I want to add something else. Everyone's use experience with the technology, like for example, I understand, and Brad, you know, comment as you hear me yapping about this. I don't think very many people will simply just automate Holly. Although again, I'm not saying that that doesn't happen. It does, and people work on the automation, they trade around it, etc. But there's a bigger picture at play. And I have, by the way, this stock up for one of those reasons. And I want to show you a couple of things about that. Number one, what have I been saying, Brad, pretty much from day one? I mean, and if you stumble on this, because you know I always like to test you, Brad, you know. But what do we talk about? There's 4 kinds of trading outcomes. And if you can get rid of one of them, right, you are then kind of in a position to succeed. So, never guaranteed, but certainly so much more than if you didn't follow these rules. Brad, Waleed knows too much.
Yeah, may I answer? I think it's if you can get rid of any type, but you want to get rid of those big losers, right?
Correct. And by the way, big losers is also a relative situation. We'll discuss that in a minute. But here I want to show you that, look at my trading here, okay? So this is me working various Holly trades that I was in, okay? And here you can see, you know, again, there's a lot of what's called folding. This is a poker type of situation, okay? In poker, you will fold lots of times. And poker is a game where you are playing against other skillful, hopefully, competitors, and it's you against other people. Trading is similar. It's you against other investors. When you buy a stock, whether it's on the offer or on the bid, someone, either a natural seller or a non-natural, meaning a speculative or a mechanical, like market-making activities, taking the other side of your trade. So from that point of view, it is poker, okay? So what I have to do is, I sometimes, you know, try lots of different things. I'm trying lots of stuff. And what I'm trying to do is make sure that my winners are considerably bigger than my losers. Now, the net result, I may be closing negative. In this case, I am. But by the way, that's something that happens. Like, you cannot possibly win all the time. And I want to make sure, you know, I've showcased you guys winning trades, and I've shown you pictures of me. I mean, Brad, you've seen some of the stuff that I've done. I mean, you can make tens of thousands in a day, okay? But that's not scalable. And so what I'm trying to show you here today is real life stuff, you know, real stuff that happens, okay? And the real stuff that happens is this. And by the way, I want to, Brad, I'll show you a couple of things that what we're working on to help you improve there and all sorts. So first of all, you can see my biggest winner is almost 2x my biggest loser. Okay, that's something I want to see from myself. Okay, now one of the things that obviously here my overall losses were down $496, and my open positions here are down $479, and that's my total for the day. This happens, but it's less than 1% of the account that I'm trading on, so I to your own account. So, and also, this is what I'm saying, like, notice the size. It looks like it's all
done in one position too, right?
We'll also notice the size.
Yeah.
Okay. So here's the situation. I've got 4,444 shares of something where I'm down 37 cents. You know, that's less than its day's move, and we're at 52-week close, and which is going to bring me to something else. Okay. So I want to explain something to you guys. Okay. That investing and trading is a combination of mechanics. So you have to be able to, you know, execute, right click, get in, press the button, or, you know, in this case, do what we've done with the buttons, make it easy for you. It's rule based, so certainly you're following the rules and everything else. But, Brad, does it lack the component of intuition? Is intuition and feel a component of investing?
Absolutely. It's a huge component.
Huge component. And if anyone tells you no, then once again, you know, you're playing at that silly HFT game where they're like the fish on the aquarium that's sucking up.
Well, and also you're not understanding the market that you're playing in, right? I mean, you have to know where you're playing.
100%. So what I want to do is I want to show you a little bit of what I call like what's it about. Right? So I've been trying to figure out this situation with X, where I'm down right now in the position, right? And I want to kind of explain myself so you can see my process. I'm going to expand this chart a little bit because, again, it's about the big wins, right? So here is a chart of X, US Steel. And by the way, the software has kind of seen lots of different things from this stock. And this is why I want to say that feel comes in. Okay, why is feel important? Well, because this is mechanical. This is just numerical hypotheticals. And then it's the risk management and what you do with it that then let you either take advantage or not take advantage. Simple as that. And also, the software isn't some sort of oracle where it's always right. That's why risk management is key. Here, this was the prevailing wind. These two breakouts were false breakouts, but not before. Like, again, I mean, this one was really the top because that was the that was the May top area, and then the sector kind of got annihilated. But here at 36, I mean, it went up, some amount, and then you had this big fallback. So what am I doing here? I just want to explain. Last time that this stock saw these levels, look at the bounce. So this is called mean reversion. Brad, what is mean reversion? Talking into your microphone without it being.
Sorry, yeah, it's finding its way back to the norm, back to the average.
Right. So you can see that it bottomed and had a very strong and quick. So from 17 to 24, kind of a big up move in terms of what you can get. I was in a lot of this, less size, but so I wrote it, so I remember it very well. So here we have a situation where it ran up, pulled back, kind of was stabilizing, and then you had an analyst downgrade yesterday. And what I'm betting on is that this move from here, so you have 1, 2, 3, 4, 5, gap down, big gap down, 6 and 7, that this is what's called an oversold position. Let me bring up an indicator. So notice again, big volume we saw right here, it went up. Seems like that whoever it was that had the intent to sell this stock, knowing what I have seen with it, and I'm just giving you, again, feel-based analysis of my behavior, that if you look at the float, and this is why there's something cool that we do. Let me move this thing and bring in one of these that I have customized over on my other screen, just so you can see what's going on. Minimize this.
I really love this analysis, Dan, because having watched you trade for over 20 years, right, you've got so many different styles, and this is really just articulating some of the different factors that stood out and stand out to you with respect to U.S. Steel. So I think it's pretty cool.
Well, I appreciate that, Brad. Let me make this again easier for people to see.
And folks, this doesn't mean go out and buy U.S. Steel.
Yeah, this does not mean to do it. I am a speculator. I'm a poker player. And I'm playing against other players. And again, there was an analyst downgrade, and this thing broke through. So notice what we have here. It's called the swing exit. Okay, swing exit means that in a purely field-based scenario, this is a point of pain for people. It's close to or right around the 20-day low. In other words, people who are long here feel like shit right here, right? I mean, it's kind of simple. That's why it's called the swing exit, because even if you're here, this kind of move could easily take away
It can be painful if you're not sized appropriately.
Right, the weak hands. So notice here, I'm sized pretty big, 4,444 shares, right? But I'm positioned entry price at 67. I'm like right here. I'm right at the area of, where are we? 52 week lows, okay? So, and again, going back from what I saw on mean reversion, if you do let's do a moving average, Brad, right? Say moving average. Brad's gonna have to help me with these indicators. Indicator, where's the move?
You got SMA. Go down, you got SMA.
SMA. What? Give me a good one, Brad. Which one should I use?
So it's a little, you're in the development mode here right now, so it is a little bit more confusing. Other people don't see this right here. So you have to put in a period. But if you just hit OK and then go back in and modify it. Right click, indicators.
All right, but let's not even do that. Let's kind of expand it for a second, right? And just say, look at where this thing is. Do you see this right here? So this 1944, okay? And we are right here. So what I am saying, just hypothetically speaking, that after being down below this thing, and this thing could come down a little bit, but there's going to be a pop to where we're gonna, that's my field speculation based on this behavior here, where it came down kind of hard, right? And then really ran up kind of hard. And right now, if you look at this SMA area, right? This is where I'm looking for this thing to come back to, like 19 something, and we'll see what happens there. But then the difference is, because I can position this way in size, right? If we're at 1930 and we're at 1730, well, I'm up $10,000. Okay. So that's a play. That's just, again, I want to.
But it just shows you how critical the position sizing is, because you're not going to probably be holding this a couple points to the downside, right?
No,
so you've made your support call right here.
Yeah, I'm right at this critical point. And here's the thing: I don't need to, because again of my account size, and also remember too, I'm kind of being helped out by something that I'm going to get back into, because remember, I'm trying to showcase to you guys the bigger picture, that it isn't, the trading and investing isn't all robotic, and it isn't all like, the Tin Man from the Wizard of Oz. There's feel involved, and the software that I'm using, right, it is helping me to feel. That's the whole point. In fact, so I've got a trigger here. Where am I? Right here. This is 1704. Okay, so we're talking about 30 cents, which if you multiply 30 times 4,400, right, you're talking about another $1,200, which I can stomach either way, because that's I can trade around it, because you can see other positions and stuff like that, right? So I'm saying to myself, look, I can handle taking the other side of this trade to see what if it does exactly what it did here, this other behavior that had at one point taken place. Do you guys see what I'm saying? Anybody? Okay, well, Waleed, I know you know what I'm saying. I just want to make sure, for the other people, because this is the part that often gets missed in investing and technology and software. Is not, and by the way, I'm not saying for you guys also to not speculate on X either. Again, I'm long and I feel like it could do something. I'm not saying, but I will exit if I'm wrong. That's all that you need to know. But what I'm trying to say is that this is how you really make the money, right? If you could catch a move like this, boom, boom. So from 17 to 24, right? That's 7 points. 7 points on a $17 stock. Brad, you're better at dumb math than I am. What is that?
That's a really good trade. I'll leave it at that.
No, but I'm saying we're talking about percentages. So what is 7 points on $17? That's almost like doubling. It's not doubling.
Not quite, right? But
like 40%.
Yeah. And
40% from December. So no, January, let's say, right? January. So in 2 months, 40%, 41%. Thank you, Bullseye. Okay, so do you guys see again where I'm trying to lead you to? The art of the game, as our great president would say, art of the deal, right? It isn't to sit there and, you know, be fed this bullshit of the 5% for the year and congratulate yourself on buying and holding and not being shaken out. The art of the deal is making 41% in 2 months, paying the capital gains rate of 30% on that 41%, and still being at 30%.
Yeah, pretty good. And if I may, I'm looking at your, well, I'm looking at your account here, not fully, but I'm looking at the positions grid and I'm looking at the chart, and I see that you don't have a stop, but you're using our price alerts kind of as your notification for that stop, and I think that's pretty smart. You know, a lot of people that don't want to put their orders out there, you know, to be fished, do have the ability, especially with longer term ideas like this is, to use your price alerts as these notification centers.
100%. So listen, guys, so that's something else that Brad, and Brad, don't forget that as we go through this presentation today, we got to cover all the other stuff that you've said. You know, there's tons of stuff.
Yeah, we will.
I'm gonna segue from this to the other thing real quick, just again to give you guys an idea of what we're shooting for, right? So remember who I am: super handsome captain of Trade Ideas, CEO. I kid, not handsome at all. But what I'm trying to tell you is that I am analogous to a race car driver for Porsche, and I take a new Porsche technology and I compete in actual races against other people to see how I do. So here, what do we know? And I'm gonna, oh my God, are we gonna show you an example of this? Because that's the other perfect segue to it. Brad said, for example, that if you put an order out, and let's say this was a real stop, like, hey guys, get me out at 17, whatever, let's move this to $17 even, or wherever it is, 17.8. Okay, that's where I'm at, 17.08. This could be a real order. In other words, I could have a stop that says once this is hit, get me out. But guys, do you understand? And I need a yes or no here, not from Waleed, because I know you know. But do you guys understand that when you have a order out in the market, out in the marketplace, that order is visible to the counterparty? In other words, the market makers, the little sleazy guys who aren't really there to do anything but to execute the fish that are swimming at Citadel and all these other places that are sucking up the micro filaments of the market, meaning like the Robinhood customers' orders. You understand that they can see your orders when they're in the market. Do you guys know that? Thank you, Mike. So what that means is they can see your orders. Well, that means that, it doesn't mean that you won't win. Like, for example, if you're playing poker, you know, and if everyone's cards are visible, well, right away you'll know who's going to be winning or losing, sort of. I mean, not necessarily, because you don't know what the other cards will be. So in other words, you can be like one of these guys, like, all right, this guy has pocket aces, meaning 2 aces, which would mean everybody else would be folding, right? You're like, well, you know what? I have 2 2s. I'm going to shoot for another 2. 3 2s beats 2 aces. That can happen. Not going to happen a lot, but it can happen. So what I'm trying to say is the reason I don't have my order visible to anybody here is because this stock is one of these stocks that if somebody sees this order, there are people out there who can take it there just momentarily, okay? So that your order is triggered, you sell to them, they buy it from you because they see that's your point of pain. It's like you pulling your pants down, so to speak. They see your size, they see your point of pain. And the point of pain is what triggers everyone, and when people see it, well, you're at a disadvantage. Okay, so what happens is I am simply doing something almost identical, and we're going to create actually something even cooler from this. Here, I don't have a stop order, and again, Brad, thank you for pointing this out. I don't have a stop order. I have an alert, so that when if this triggers, I don't have to watch it. It'll pop up, and it'll say, hey, buddy, we're uncomfortable here. You know, I may cut half, I may do something else. I may just also just like, okay, let's watch it here, right? Because again, if you look at the, I want to show you So this is where I was sizing into the position, by the way. Boom. See like how, look what I was doing here. It's a similar type of play. Brad, I mean, you should appreciate this, right? This thing was coming down hard. People were panicking. So I bought, came down, came up, came on, started consolidate, I bought some more. And then right here, I was actually feeling pretty good about it until, you know, it went here, but then it rebounded hard. And then again, I ended up, my risk was not taken away. So I ended up getting, staying in the position. It's as simple as that. And hopefully, again, tomorrow I'll be paid off. We'll see. Maybe not. So I am showing you a technique. This is what the Q&A is for. Like, how do you drive this cool Porsche with all of its Tiptronics and whatever? Here I'm showing you. I've got my avert set. And again, you know, you can see, let me squeeze it up here. Here it is. This is one of my entries, my other entries. And, so my average price overall is $17.67. So I bought something here, then some more, then I bought some more. And together, these, with the initial one, this is my average. See how that's put in it? By the way, Brad, as you know, we need to change that from AI to me-I or me or whatever. Because, you know,
yeah, so, or we could just say average.
Yeah, average. AG. Don't be smart, Brad. So anyway, so you guys can see what I'm trying to do, see how it works. Okay, now I want to segue into when it did work, when it worked amazingly, and what the game is all about. Okay, so guys, this was a trade from Holly, and you know that we put all of our numbers out there. March 29th, okay, entry at 47.29, and this actually didn't, it was a 29-cent risk off loss, okay? But because again, watching where this was and seeing that it was at 52-week lows and understanding that these kinds of situations might be very profitable, ended up staying in here, okay? So here I am. My initial buy was right here, and then I bought. You
probably added to that position to get that average.
I bought a little here and added as it started to turn around on this day. And I have not had to exit, and here I am at 55. From 49 to 55, you know, a good over 10% gain already. Guys, here on 300 shares, I'm up $1,700. Let me just give you a quick understanding of where this company has been. Look at how far it has fallen from 147 in the beginning of this year.
And there are a lot of those out there.
Yeah. So price, the IB orders are held by at IB, but IB just is not. They hand them off to their executing, you know, vehicles, which are the Citadels and the others. When they're at IB, they are visible. Okay, so make no mistake, when your order's in the market, ready to be executed, it is visible. Okay, so I'm trying to show you guys that, look, this is another example, by the way, of here, again, Holly got me, I never even thought of this, so this is what makes this, why do I love what we do? I mean, I gotta tell you guys, I love what we do. I'm so passionate about it. Damn it, you know it from my voice, you can tell. Okay? So look here. Have any of you ever heard of this company before? I know I haven't, because we're all been indoctrinated to only, Waleed, I'll definitely talk about that, to only, you know, think about Amazon and Facebook and all this bullshit that you hear on CNBC. And again, you have to like clean your brain from it. But certainly, okay, you most likely never ever hear of a company called Cooper Standard Holdings, which, by the way, makes stuff for automobiles in Michigan, okay? Something that's very political right now. And this company, for whatever reason, and again, I've not been paying attention to it because I don't know it. I do not know anything about it, okay? Has gotten destroyed from 2018, from August, from highs of 145, 100 points, okay, to where we are at 47. This is because basically somebody had decided that the whole automobile industry was going to go to hell. You know, doesn't matter. Like this, that part's just my comments. I mean, this is a giant annihilation, and if anything, I wish that Holly would have given me a sell signal here, because that would have been great, right? But okay, the point is though, and this is what makes this technology really good. Through Holly's AI, I got into this trade. So this first trade that I was in, I didn't come up with it. It was an AI generated trade, and because it was an AI generated trade, I was in it. So that's what made me bring this thing up, and I was like, dang, look at this thing. You know, and then I went to do, look at this. I'm like, oh, they make North America and Systems Europe, and they're, you know, brakes, and these are guys that are in the car business in Michigan. Okay.
Well, you know, that's where the critical thinking takes place. You know, you got into that position, you were analyzing it, I'm sure, towards the end of the day when you were trying to make a decision, is this something I want to keep, or, you know, I'm in the money pretty good. You looked at the daily and you saw, wow, this is a really good risk-reward opportunity. Little critical thinking goes into taking it to the next level.
Exactly. Exactly. And so, and this is what I'm trying to say is that I'm now hoping, although I do not know, right? But I'm hoping I might not have to get out of this thing. What if it goes back to 120, which will be then only 20, 30 points still below its 2018 high. I mean, and the float, look at this, guys. I mean, these are where you have to like really start thinking about the bigger picture. You will pull up a company like, let's say Facebook. Do you see the float? Brad, do you see the float?
That's a big float of 2.3 billion.
Right, that means that basically if you're in a swimming pool, and you better have a motor to get through it. Now, obviously, this thing trades a lot of shares and lots of institutions, everybody in it. It's not a one-for-one, but again, I want you to think about some things and the notion of opportunity. Here, Cooper, whoops. Look at this float, 17 million shares. It's a tiny, tiny little float. And we've talked about float many, many, many times before.
It just directly correlates to some increased volatility or potential volatility.
Well, potential volatility that tells me that, wow, I could ride this thing possibly back to the top. And if you're there, then you can let her wiggle around some, because again, you know, it can wiggle from 140 to 100. You're sitting on 50 points. Do you guys see what I'm saying? Like, there is this notion you can be a long-term stockholder. Do you know how? If you're up big. The problem is they get you, you know who, Brad, they get you to be a long-term stockholder when you're down big, to hope that it comes back. No. That's not how it's done. You can be a long-term holder and enjoy the ride. That's the ultimate win, right? Enjoying the ride when it's all wind at your back. And I want to show you again that that's possible. And what one of the beautiful things is the software will bring up these kinds of stocks to you. And this was a statistical entry. I don't know why it happened this day and not that day. It would have looked good, almost the same exact way, right? But it's all timing, Brad. We don't know. This is the cool thing about our AI. You know, this is the part that nobody can replicate, including us to some extent, is that we don't know why this signal came through at this time. And let's see, what strategy was it?
I liken it to footprints in the sand. It saw something that we are not necessarily able to.
But look at this interesting strat. I mean, because that makes perfect sense now a little bit, right? So we have this strategy in the back, you know, and it's being worked on right now. It's called float on. Float on has to do with this, meaning that if you can get on the right side of a reversal of a stock that has a small float, goodness gracious, guys, we can go from 50 to 70 real quick. I mean, that's basically the truth of the matter. If some buyers, real buyers, come in, woo, I mean, you will see it right back to where it was. And so I'm saying to you here, as both the race car driver and a professional quote unquote speculator and someone who's testing the software so that it's something that I would want everyone to participate in, here I am doing what I expect in the future lots of you to do. The software is seeking out opportunities, and then it's your risk management that will let you know if you can and cannot stay in it. Okay, so now, Brad, let us real quick segue to the most beautiful trade today that I got out of for the loser. And this goes to, Brad, what did we say about IB? I mean, please, Brad, do me a favor. Explain this trade while I quickly get my coffee cup real quick in the other room. I mean, this is so beautiful that you got it, Brad?
It's probably a good time to talk about a new feature that we've added, and it should be available to everybody if they download the latest one, and that's our re-entry feature. And it's available both in Brokerage Plus for automation, but it's also available on the AI windows, so you can see when the re-entry algo kicks in. And this re-entry algo just got stopped out a second time to the penny. And you know, that's where, again, you really need to analyze these on your own and do some critical thinking. This is a stock that would have been better served for Dan to have his price alerts on here, so that when it really started to run away, he would have been notified of it. But yeah, it's, you know, by having those stops out there in the marketplace, they are visible, and a lot of times they're going to be hit when they see those orders just hanging out there. But yeah, this is a good opportunity to talk, you know, about that re-entry feature, and you have the ability through Brokerage Plus on the AI automation tab to turn those on. And the way that it works is, if you were to get stopped out, or even if a stock happened to go below its stop price, then it's subject, if you're not in that position already, to be a re-entry position. And essentially the algorithm that we have in place is halfway between the stop price where you were stopped out and the original AI entry. When that threshold gets crossed again, it's going to be up for re-entry. And that, on the AI window, it's going to populate the re-entry time. It's going to give you a notification bar across it. It's going to give you the audible alert if you have the audibles set up. So it's going to give you that notification.
Audible.
Yeah.
So, but going back to what I wanted to show you guys today about understanding the counterparty, and obviously re-entry being critical. Do you guys see this? This was a fishing expedition by the market makers on Deltec, who just saw my orders. I mean, literally, I printed, they saw this order, and look at the snap back. I mean, do you guys see what I'm saying? Please understand the kind of environment you deal with. I mean, this is what we say, why you have to constantly be working against the counter. Yes, the sleazies, Wally. Yeah, they see you there going, oh, this guy's got his pants down. He's not too well hung. I'm going to tick him. And when they mean, and Brad and I always joke about this too, you can get bottom ticked or top ticked. This is called the bottom ticking, where they're like, look at this guy. Oh, this guy's an idiot. Oh, let me get you. And because by the way, do you know what their advantage is? They know they've got a natural buyer just waiting. And their natural buyer's probably like, all right, guys, let's not do anything for the first. I mean, this is literally how it happens a lot. Let's not do anything for the first hour. So that would be 7:30. Let me see here where I'm at. 7:30, Brad, is that literally like to the minute? I kick my own ass for falling for it. But do you guys see what I'm saying? Like, people often think that like these technology, these market makers are so sophisticated. Well, they're sophisticated. They're like, all right, guys, I got a lot to buy. Very into this DK. Don't do anything for the first half hour. So, I mean, for the first hour, let the volatility die down and then do what we got to do. And here you have it. I'm in. Somebody saw my pants down with my order. I should have had the alert, had it on the alert. But
should have had a price alert at the high of the day right there, and you would have been notified.
But yeah, but look at then what happened. Okay. So this is what this is an example of the opportunity that we want to take advantage of, that we're trying to avoid where this happens. And I want to talk a little bit about, Brad.
And I think, Dan, this was one of our trade of the week calls this week as well, right? So and Bullseye was talking a little bit about how he played it. Again, it's really a very individualistic way to approach the marketplace. He kind of averaged into that and is now in the money, but he put a little comment earlier. But yeah, it was a trade of the week call.
Yeah. So again, see this move? This was basically, I mean, number one, the moving average is definitely going up, so that's nice. So you're going in the direction of the prevailing winds. And what you're doing here is Holly was trying to catch the mean reversion. And one of the things here that we're going, so remember what Brad and I were saying, there is no finish line. In other words, we haven't stopped the AI development. We just started it. It's going to get better and better. We're still sort of at the Model T level of the AI, even though it's very sophisticated and there's a lot of cool stuff. So Brad, you and I were discussing the fact that one of the things that we're going to be doing, right, and because based on these experiences, because look here's another one where you got there was the signal I bought, got stopped out, and then it went. This is the column that tells you really quick. But these are different types of animals that you can trade in lots of different ways. And this column, distance from exit price, right? This is telling you how to handle the situation. Look here. Boom, it's reversed. Here's the bigger picture. So we're always experimenting. We're always trying to do lots of stuff. But going back to what I had said about poker, right? You have to fold a lot. Because if you don't fold a lot, well, then you're going to be one of those guys that is the long-term investor that's down and everything, hoping that it all comes back. We're never in that situation, okay? That just is not something that happens to us. So let's see, who brought up GBX? Oh, Jeff. GBX. Bought some, okay? Right here from the Holly. I actually added, I think it was in 93 shares because of my risk, so I just wanted to make it an even number. Same thing, looking for that mean reversion play, right? That if you can get into, I mean, you're going to be doing some serious. So this is the other thing, by the way, this is almost Brad, look at this cell right here. Remember, everything is about risk management. You want this to work, but you manage the risk. You want this one to work, you want to manage the risk. You want this one to work, and if you manage the risk, look at this move. I mean, that's what it's about, right? Guys, this is the whole point. I mean, you do lots of folding to catch one of these. Like you might miss this one, you might miss this one, but if you try this one, dang, and if you can hold on, look at this move. From 3 months, you're talking about 100%. I mean, from this point, that's the whole game. And now that we're here, right, if you zoom into it a little bit, like, well, look at where I am. I'm right at that swing exit, similar to the X concept, where, hey, I want to mean revert here. And if we can do the proper mean reversion, and look at this, volume that's picking up on the daily, right? You can see that, right, guys? So what you're seeing here is capitulation. So I've used my technology and the field, and again, this was obviously, the AI brought this up to me. That's what it's doing. It's like, hey, Dan, check this out. So we're working on the technology right now to help us get into these and really stay in them longer term if we can. Okay, that's really the game, right? So that we can turn GBX possibly into a CPS, and that we can turn CPS into a forever vacation, as this goes back to Possibly. Hold on one second. Okay, so does everybody, is everyone with me? Do you guys understand what we're sort of working on? One of the things that we're doing right now for the AI, we're gonna improve the stops. So Brad, maybe can you give people a summary of like, what did we talk about in terms of more stop optimization?
Yeah, so we've always been working with respect to Holly optimization on really the strategy optimization. We go into the optimization process already with our stop in place, and it optimizes everything on that value. But we're going to start taking another approach as well, really in addition to the way that we're already doing it, and that's taking the data that we already have over a couple of years and really refining the various stop prices and the hold times, and really taking a look at the other component of the strategy that hasn't really been modified to date, and looking at a way to really optimize that as well.
Brad, one of the things that I want to kind of point out here to people is that, when we first got into this, there's a lot of thought process that went into the overall risk avoidance, because nobody likes to lose, right? But as we've gone through here, we've taught enough and we've made people understand more and more of the risk management and stuff like that, so that we are now kind of shifting gears a little bit and getting focused more on the big wins. So for example, you will be able to say something like this: get me in with the AI, but instead of get me out automatically, possibly, right, Brett, alert me with a limit alert, auto-generated limit alert that says, hey, I am at yesterday's low. Do you see guys what I'm saying? This goes back into like these pictures. So like you get in right here, hopefully, right? You would be out yesterday's low. Or maybe the lower of today's low is yesterday's low. We kind of talked about just, again, basic concepts that let you stay in at the pivot points, because the AI, what is it really trying to do, right? It's trying its best to find the critical pivots. And if you look at, again, here's another one, by the way, Brad, that I caught. So see this 105? This one was one that I was in from here. In a very similar type of trade that I've been working with X and some of these other ones. And the idea here is if you're in here, you're saying, okay, well, I'm going to get in today. Let's say that if you zoom in for a second right here on this turnaround day. But my low is not going to be the low of today. It would be the low of tomorrow, yesterday rather, or whichever one is lower, the lower of the day that you're getting in or yesterday. And if yesterday is the low, then you're going to give it that like basically more breathing room, because you're already saying, hey, the AI most likely has gotten me into the proverbial wind. The wind is at my back. So yeah, Waleed, we're working on the hiding of the stop. We're working on increasing the stop price to give people with bigger accounts more flexibility. Because again, people have said to us, guys, we're not just trading like $15,000 account where every $5 matters. I've got like 300 grand in an account, and I can sit, $2,000 swing here or there on a P&L of the day without any problems. We're like, that's a good point. So that's the kind of things that we're working on. That's where we're heading. As Brad said, we've already got the re-entries. We're working on continuing to optimize that area. Brad, we talked about that they need to get the new download for that stuff and things like that, right?
Yeah, I kind of mentioned that earlier. Make sure that you do have the latest release, because the latest release does hit on a couple of different features that we've added over the course. It's been in our beta for a while, but the weekly and monthly charts. So we've got some long incorporated into the charting right there through the time frame. Still a few little bugs we're working out, but that's in there. So that's pretty helpful.
Buying the air, it's all good. But you can see the point. I don't know what that is, but let's see here.
We've already logged that bug down, so it's all right.
What happened to Dell? They do a reverse split?
Well, you can look at your chart right there. They kind of went out of business for a while, right? And
Oh, yeah, I forgot. Same name, went out of business. So here, by the way, okay, by the way, notice, again, just longer term stuff. How many signals have we had in Microsoft with the AI? Remember, we show you everything. 1, 2, 3.
yeah, and we didn't have AI signals before 2016, so.
But each one of them worked. This one.
Yeah, that's Microsoft, what a beast, huh?
What a beast. But look, from 16 to 19 in 3 years, it has more than doubled. Okay? That's the game, guys. And you would have been more than doubled from here. If you missed it in 2016, you could have got it right at the end of 2016, and you'd still be doing good even at 99. This is I mean, we always want to talk about the bigger picture because sometimes people get so focused on the day trade, they forget that there's this bigger game where you can let it do its thing. And that's what it is really about, letting it do its thing. And here again, monthly chart. I can go to time frame, and I can say weekly. You see a little bit more of the volatility. Here it is during the week. Okay. So as Mike and Brad both said, 4.2.74. Okay. Let's finish up, Brad. I mean, are there any questions about anything that we've done, you guys? Because again, big load of information, lots of cool stuff. Hopefully you can see that the idea here is that, and this is one of the cool things that I do, is that when I set here, let me minimize this real quick. So notice under here where you go options and risk based on stop. Brad, do people know what this is?
I don't know, but I can certainly explain it. We give everybody 3 different ways to keep track of their P&L, and this risk-based stop is pretty cool. It's pretty unique. What it does is it looks at how far away the stop price is. So if you're going to hypothetically get stopped out of that particular position, how much are you willing to lose? And what it'll do is it'll size you appropriately so that in this case, Dan's putting a $35 risk on this trade. If it gets stopped out, he's going to be losing right around $35, give or take his entry price and the slippage on the exit.
Exactly. So the idea here is with $35 risk, what I'm doing with the AI, so what you see, whoops, let me cancel this for a minute. What you're seeing here, there's a term for this. These are called feeler trades, feelers. So that then, and this feeler trade here, and CPS is what turned into, because again, the size I initially got into was probably at $49. I mean, the way that it trades is probably like around 140 shares. So I doubled it once I saw the move. So these are all feelers, or like as I said in poker, the fold moves, fold, 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 but I'm feeling it out. And then as it starts to work, I add size. Or if I see just an opportunity that I want to make sure I don't ignore. Like again,
yeah, a lot of people will put feelers on just so that you can keep track of it in your P&L. That's kind of your topmost view. It's where you're looking at things, and when things start to move, it's really easy to spot it in that particular window.
100%. And again, I make mistakes, but the whole idea about making mistakes is you want to be able to handle it if it goes wrong. And so here, I know that I can handle it even on, let's say, another 50-cent gap down where it would break below 17, right? Okay, so I will lose 2,000 there, a couple of these trades, and I will make it up. But the feel that I will get, or rather on the upside, is that if it bounces even a little bit, I'm getting paid. So that's kind of how I think through it, and I wanted you guys to sort of see the actual thought processes that go into, what's going on here. So let me get back into this, and we're going to wrap it up, but I'll take you guys through this. We have a trading room, which is led by Barry Anderson. Is Barry here today, Brad?
Barry is here. He's so quiet. Yeah, but he's here.
Quiet, that Barry. It's probably just probably when he saw the 4,444.
He was like, what the?
He said, is that guy crazy? That guy's not Canadian. Barry runs our trading room. He's an amazing moderator, very caring, helps people, and also what we've said from the beginning, the key here is not to sell you guys, but to show you best practices. I mean, we do enough marketing, obviously, but we sell by showcasing what can be done with the tech that we have and people doing it. That's why we showed you the real volume that's already increasing, where we said there's only going to be 1,000 people to get the AI for $1,100. And that number is dwindling, so if you don't have it, you should get it. But Barry's room is a great way to window shop. Lots of people in there, people with trade ideas and people who just kind of interacting. And also, Brad, we just switched rooms, right?
We did. I think it's, I don't know a whole lot about how it's different from a perspective of how the user would get in. I think you still go to our website and it gets you in, but it's a lot more integrated. It keeps, it's an integrated username password, which is the same as our software. And so really just trying to bring it all together as a unified product.
Yeah, and that's just something that we continue to do, but I recommend Barry's room if you're just shopping around or if you're looking for ideas, because Barry also puts it on. So nobody's faking it. We do a webinar, at least when we're not snowboarding. Thank you, Jeff. Fridays, please subscribe to this. One of my favorite ones, if in doubt, don't paddle out. It's a sign I saw, and that really describes trading. If you're scared, that's a terrible place to be when you trade. So the idea is to get into a situation where you're not scared, which is why we can do what we did there, what Brad and I were showing you, losing only $35 per trade. If I'm in 20 trades and lose on every one of them, right, that's only $650. Well, I can handle that. And I know that I'm not going to lose on every one of them. So, and then the ones that are winning, I can really work to stay in. So that's really the key there for everybody. We have lots of information to help you understand that it's not just about buying and holding, although again, if you can and like get into Microsoft at the right time or some of these other ones, it's always good. You should do it. But here, if you go to trade-ideas.com/ebook, you get that. Let me go back to this, just so you guys know, we have a promotion code for you today. If you don't have a product, Holly Spring, 15% off of the first month for a year of trade ideas. And we show you, obviously our prices are monthly, so you multiply all this, or yearly. It's the only way we do it. But this is how much the software costs on a per diem. So our premium software at the highest, so if you're paying the highest level for our software, you're only spending $7.50. You're getting your Subway lunch. Actually, I mean, probably half of your Subway lunch with today's prices. So we're very inexpensive for what we provide. It's just, of course, a matter of you guys figuring that out. And a lot of you already have the tech, so we're grateful for all that. But I want to make sure you guys see the actual prices themselves. So let me scoot in here. Very easy to get a hold of us. Scott and the marketing team are always there. While I've been kicked off of social media for being a patriot, we do have lots of people who are still on social media, Brad, right?
Yes, we do.
Yes, not me, because I'm too dangerous.
You have run your course.
I've run my course, but at Today Trader, at Quanbot, at Trade Ideas, please like us on Facebook. I hate Facebook, but we would love for you to like us on Facebook. And of course, you can always shoot us an email at info@trade-ideas.com. Thank you. We are grateful for your time. You guys are what makes us happen. We're still shooting, hopefully, for our 2020 IPO. Those that are subscribers and our affiliates will get shares. Find out about our affiliate program online or shoot an email at info@trade-ideas.com. That's another way that you can make a lot of money by being a Trade Ideas affiliate. Scott, I think we're all good.
All right, great. There'll be a recording up later on tonight or tomorrow. Thanks, everyone.
All right, guys. Take care.
Bye, everybody.